Alright, morning everyone, welcome back to Compound Interesting. This is Emil, and in today's video we're going to have a look at an interview between Anthony Pompliano and Jim Cramer and them discussing Bitcoin. And Anthony Pompliano basically gave the bull case to Jim Cramer about Bitcoin. So I'm going to give you some highlights, all the Bitcoin highlights from that clip, and why it's so important that Jim Cramer is coming on board onto the Bitcoin train. Choo-choo!
Choo-choo, motherfuckers!
Before we get started, I'll just mention again that I recently got 1,000 subscribers, so thank you all so much again. And if you didn't watch my last video, I'm doing a competition, so I'm sending out some of my favorite books for the next couple of videos. So any of these books right here, and they're all linked in the description. So all you have to do is like, comment the book that you want, and it can be any of the books in the description or any book at all that you want. Comment them in the descriptions, and you have to be a subscriber. So I'm going to be releasing the winners in the next couple of videos, so make sure to subscribe, and it's going to be 3 winners. So I'm doing that giveaway because I really want to spread those are my favorite books in the description, so I want to spread that knowledge and help you grow as an investor and as a human being. So with all that said, let's get cracking straight into the video. So if you don't know who Jim Cramer is, he hosts Mad Money on CNBC, so I'd say a lot of you do know who he is. He hosts basically a show on CNBC talking about stocks and the stock market, and he also owned a hedge fund back in the day, medium-sized hedge fund, but he's quite a personality and he's kind of funny, and some of his stock picks are kind of weird, but he's done pretty well. So he gets a lot of hate, but he's actually starting to change his tune recently. He's starting to look at more younger generation investments. So he recently came on to the Tesla Daily Show. So he was interviewed on the Tesla Daily Show and they talked all about Tesla. So it's kind of funny that Jim Cramer is suddenly starting to open his mind to more younger generations, or kind of alternate, more innovative investments. And Tesla and Bitcoin happen to be my 2 largest convictions and 2 largest investments. So he's recently changed his tune on both of these, Bitcoin as an asset and Tesla as a stock. So they're my 2 biggest positions at the moment by quite a large margin. So I'm very interested to see this progression in Jim Cramer's thoughts, because Jim Cramer has an enormous amount of influence on the general population because he hosts that show and because of his Twitter account and all sorts of things. So, but not only does he have a large influence, it's kind of a large influence in a different sector to people who watch YouTube like yourselves. Like, people who watch YouTube are probably in the younger generations, younger investors, whereas people who watch CNBCs are generally older investors, or, you know, people who would follow Jim Cramer's moves might also be hedge funds or people in the later categories of life who have larger amounts of money. So when we see Jim Cramer starting to be interested in these kind of assets and these kind of stocks, even if his peers aren't directly influenced by what he's talking about, it is quite likely that they're kind of thinking the same thoughts, or whatever has made him change his mind might also be making them change their mind. So this could potentially start to be a catalyst towards that shift in mentality for the older generations. Jim Cramer, you'll see it throughout these clips, but he's really trying to be open-minded with his newer investments. He's really trying to not be a typical closed-minded, well, he's not elderly, but, you know, a more senior investor or older investor, experienced investor, who are generally sometimes quite closed-minded to innovation and younger stocks that have high valuations. He's kind of having an open mind. So Jim Cramer is currently building his trust fund for his kids, and he doesn't want to, he's supposed to be the guy that knows it all, or he's supposed to be a smart hedge fund manager or smart savvy investor. So he doesn't want to seem foolish when his kids get his trust fund and there's no Bitcoin in it if and when Bitcoin goes, you know, enormously high and parabolic, like in 10, 20, 30 years, when Bitcoin is worth many multiples of what it is right now. He wants them to think of him as that maybe he doesn't even care about the amount of money that they get in the end, or the amount of assets that they get in the end. He also doesn't want to seem like a fool for not, or a closed-minded fool for not realizing this obvious investment opportunity right now in Bitcoin. And Jim Cramer is also a really big believer in gold. So it's quite often said that there's enormous similarities between gold bugs and Bitcoin bugs, because essentially everything about their belief systems in gold and in Bitcoin. The scarce money principles are extremely similar. However, it's just who wants to be the analog and who wants to be the digital investor. So because Cramer is interested in gold, you can kind of see straight away what the value is for Bitcoin, and it's just a digital version of gold in his mind, which makes perfect sense. So let's start off this clip now where Anthony Pompliano and Jim Cramer kind of compare Bitcoin to gold.
Yeah, here's the whole pitch, I think, right now is if you look at Bitcoin specifically, the two things that are important to understand is the macro environment. There's no better asset in the world than Bitcoin in terms of you've got interest rates manipulated down to zero. You've got trillions of dollars being printed, which creates a fear of inflation, whether it ever happens or not. Retail is going to rush for inflation hedge assets. Inflation hedge assets can include everything from real estate, precious metals, Bitcoin, etc. And Bitcoin structurally, it's the smallest market cap, it's got the most volatility, is likely to go up the most in value when people fear inflation. Right. So if you look at like a Paul Tudor Jones, when he comes out and he says, look, inflation hedge assets are going to do great in this macro environment. It's just Bitcoin's going to be the fastest horse. Right. So they'll all do well. Just Bitcoin's going to be the most volatile. So when it goes down, that means Bitcoin draws down the most. But when all these assets go up, Bitcoin goes up the most.
But I mean, Brent, let me give you the thing. I mean, there's a stock called Barrick. Okay.
Yep.
The symbol is gold. I like that because it's easy. Portnoy must like that. He said, I want to buy gold. He goes buy gold. And I think gold is remarkable. And this company has an incredibly low cost. Gold is, they make about $700 per ounce. Does gold complement crypto, or does crypto make it so you don't need gold?
So the way I think about, take like a gold bug and a Bitcoiner, you put them side by side.
Yeah.
They agree almost to the T on all of the structural problems, the macro environment, all those issues. They agree on the theoretical solution, which is sound money principles.
Right.
What they disagree on is the application of the sound money principles. So you can do that through a digital means, which is Bitcoin, right? Or you can do that through more of an analog means, which is gold. What most Bitcoiners would argue is if you put gold and Bitcoin next to each other from a utility standpoint, Bitcoin is more efficient, it's more divisible, it's more portable, it's got kind of all these advantages, right? And there's an entire generation of people kind of 35 and under, 40 and under, whatever, they're choosing Bitcoin because it is a digitally native asset versus gold, which is kind of the boomer sound money principal asset. Well, now they're both gonna do well. They're both gonna do well. It's just which one's gonna go up more.
You're exactly right. I see the fluidity of gold and gold stocks and the GLT. I tell people if they can, and this is where I think that you've got the edge on me, go buy bullion, put it in a safety deposit box, which you have to pay for. Give keys to your kids, and remember that you can take bullion if you have to, or gold coins, to the next place you have to go. But there's a big vig for gold coins, costs a lot, and the bullion's heavy and very bulky, and you can't just walk around with it. So yes, you're right. My curiosity about crypto is if I had to know, if I were more secure in it, I would say, okay, look, younger people, you may not like the analog. You maybe feel more comfortable with the digital. I totally understand. People want to buy, people want to dig a hole in the backyard and put gold. Well, forget it. I mean, the guys who cut your lawn got to find it. So I feel very strongly that I have missed crypto. I haven't missed gold. I had my father buy a lot of gold. You go overseas, you can put your gold in. In 1933, the government confiscated all the gold that people, and that was for FDR.
So I hope you picked up on how open-minded and eager to listen Jim Cramer is. That shows how little Jim Cramer cares about his ego. He just doesn't care if he looks like an idiot. He just wants to learn as much as possible, and that's always the way you should be as an investor. Don't care how you look, or if you look stupid or foolish. He's trying to learn as much as possible from this interview. So I'm obviously going to leave the full interview in the link below. So Anthony Pompliano, the Pomp podcast, one of the best Bitcoin, the best Bitcoin podcast there is. So make sure you follow that if you're interested in Bitcoin at all. Anthony Pompliano is definitely one of the best guys, if not the best guy, who ever talks about Bitcoin, in my opinion. But I'm really, really impressed by how open-minded Jim Cramer is in this interview, and also in Tesla Daily's interview with him talking about Tesla. So Jim Cramer is showing how smart he is and willing to learn he is, which is fantastic. So just about the gold thing, Jim Cramer is actually 10% invested in gold. So it kind of shows why he's interested in potentially buying up some Bitcoin, which Bitcoin and gold have enormous similarities. All right, so I just wanted to show this next clip because a lot of people have security concerns when it comes to Bitcoin. Are they going to lose their Bitcoin? Is it going to get hacked? Especially like older generations, they kind of hear, oh, I can lose my Bitcoin, I have to look after my Bitcoin myself. So Anthony Pompliano kind of walks Cramer through all the technical difficulties associated with Bitcoin, and you can see Jim Cramer is actually taking notes. Like, that just shows the minute this podcast finished, Jim Cramer went out and bought Bitcoin, and he was using Pomp to work out, how do I do this? What's the best way I can go out and buy Bitcoin? If you watch the full episode, it's starkly evident that Jim Cramer gets up off the couch, runs out and buys some Bitcoin.
How do I know? I read these stories, about someone forgets the code or they lose it. And then I start thinking, well, that's too scary for me. Was that just a phony incident? And also, can the cyber attackers, like I like Zscaler, I like CrowdStrike, I like Palo Alto, and they always tell me that people are hacking crypto, or also they tell me that you got to pay ransomware in crypto. So therefore you better find out about crypto. So obviously it has more uses, but give me a security story.
Yeah. So if you think of gold, right, you can own gold, everything from own Barrick Gold, which is a company that's in that business. You can own gold that somebody else holds for you, right? You can go own the physical gold and put it in your house, or you can own gold and put it in a safety deposit box and have kind of the most extreme, severe security setup in the world, right? Same thing with Bitcoin in the sense of there's many different ways to get exposure, right? So you can go today and you can simply use GBTC, right, with Grayscale Bitcoin Trust, and you can get exposure to the actual underlying asset, right? You can actually buy Bitcoin and you can hold it in a custody provider. So there's everything from BlockFi, Coinbase, Kraken, Gemini. All these guys have kind of institutional grade custody providers. Then you can actually buy Bitcoin and you can take possession of it yourself. Most Bitcoiners are going to argue that you should take possession yourself. They like the self-sovereignty, they like the security, all that kind of stuff.
Now, what is it in here?
Yeah, well, so you can have a hardware device, you can hold it on a wallet on your phone. There's a whole spectrum of ways to own it. What I always tell people is, if you know yourself and you say, there's no way that I know anything technical, you can just go buy and get exposure in a stock ticker, right? You can just buy GBTC. If you say, hey, you know what, I want to go kind of level 2, I can buy actual Bitcoin on one of these exchanges and put it into an institutional grade custody provider.
So GBTC is like GLD?
Exactly, for Bitcoin.
Really? And it's $11?
It's $11. There's a premium.
Why wouldn't people do that? Is there a VIG there?
There's a premium, and it can get kind of nasty at certain times. Like in the really, really obviously frothy times with Bitcoin, it can go up. But again, if that's the exposure you want, right, then you can just do it there. So it's kind of a spectrum of control.
So now I want to let Anthony Pompliano take the stage and kind of compare Bitcoin to gold.
But I think the bigger thing here, when you compare Bitcoin and gold, you'll like this, I think, which is with gold, if I said to you, how much gold is in the circulating supply, you'll give me kind of a really close.
It's close to 1% every year. So it's incredibly healthy. The shortage of gold right now is extraordinary.
Yeah, and you'll tell me a pretty close estimate of what the circulating supply is. Sure. You'll tell me a pretty close estimate to the incoming daily supply. Yeah. I think part of what the younger generation is realizing with Bitcoin is everything is provably scarce. So one of the big differences between gold and Bitcoin is right now, there's some guy somewhere who's digging through his field. All of a sudden he finds a gold deposit, right? It's not going to move the market materially, but it increases the gold supply, right? And nobody knows, and there's a latency of information, all that kind of stuff. With Bitcoin, everything is provable on chain. So I know every single day, and I can prove to you that 900 Bitcoin are getting created each day. Then I can prove to you on chain exactly 18,460,000 Bitcoin exists in circulating supply. And so it's this weird world of like, I know that gold is scarce. I just don't know, to the T, how many ounces exist, right?
Nobody knows.
And having that provability, I think that the younger generation, just because they're digitally native, say, hey, that's really attractive. I can actually point to an exact number and audit it myself because it's transparent.
So we can see the dissimilarities between gold and Bitcoin. However, obviously Bitcoin has that provable scarcity that gold doesn't have. No one knows how much gold there is in the world exactly, but Bitcoin, everyone knows how much Bitcoin there is. Well, anyone can know how much Bitcoin there is in the world at any given second.
If I were coming out of college, no. If I were 32, 35 and had started to make money and felt like my principle, which is that you need 10% of your assets in gold, I've been a gold bug all my life. Do you think that I wouldn't even be thinking about gold and I would just be thinking I need 10% of my assets in a great hedge against inflation? So I need to be in crypto, and that gold would be something that actually didn't compute, because who wants to hide something in some place and pay for a deposit box? It's really an inefficient way to fight inflation.
So as I mentioned, Cramer is buying Bitcoin. He's not buying Bitcoin to make a quick, 2x on his money in the next couple of years. He's buying it to put into the trust fund for his kids. So he's looking at it from a decade's perspective, which is probably the way I'd recommend anyone to look at Bitcoin, as a decades long investment where maybe you can sell 10, 20% in the next Bitcoin bull run. I probably would only sell that much. If it went completely parabolic and I think it was due for a crash, maybe I'd sell a little bit. But for me, I'm really saving that for decades out, because the potential for Bitcoin over decades is enormous. So in this clip, we saw Cramer talk about how gold is an inefficient hedge against inflation, and how often people lose their gold, or their kids don't know how to access their gold, or they don't even know where the gold is, or you have to have your gold in a safety deposit box. So it does make a lot of sense to Cramer to have Bitcoin instead of gold. It's just a better upgrade to gold. And as we'll see later on in the next few clips, Cramer is very, very aware of the macroeconomic effect of all the printing that the Fed and all central banks around the world are doing. So he realizes how important it is to be hedging against inflation right now. And Bitcoin, because it's such a low market cap asset in comparison to stocks or gold or most precious metals or real estate, because the market cap is so small in relation to them, Bitcoin is likely not going to just keep up with inflation. Like if you invest in gold, it's likely you're just going to keep up with inflation, or maybe do slightly better. But with Bitcoin, it's likely that unless Bitcoin goes to zero or some technical difficulty happens, Bitcoin's going to completely outperform every other asset class, or so Pompliano thinks, and I think. So I think you're seeing how much you can actually learn from Anthony Pompliano. So I can't recommend his podcast enough, or any of his interviews on CNBC, or wherever you can listen to him, or on Twitter. So again, I know I'm using a lot of his footage, and I thank him for that. Obviously, he's probably not going to watch this, but just wanted to, I'm using his footage here and his thoughts. So these are just my reflections on his thoughts. So I think that goes without saying. And I'll also link another video from him, given the absolute beginners. I'll put that in the description, but the absolute beginners, everything you need to know about Bitcoin, I'll put that in the description as well as like the number 2 link. But here he is explaining why and how Bitcoin has been the best performing asset over the last decade, and the risk reward profile of Bitcoin.
Yeah, I think the first key, and we talked about the financial education, is people are waking up to just, hey, I should have an inflation hedge asset in my portfolio, right?
Absolutely.
There's a bucket there. I got to have it. The way that I talk about it is each individual person, so age, income level, goals, all the optimizations are really hard to kind of give, one size fits all advice, right? Obviously. What I do know is the zero exposure to Bitcoin is the wrong answer. So yes. I don't know if it's 1%, 5%, 10%, right? Each person's different, but getting off 0% is really, really important, because what it does is gold and Bitcoin, while they both serve as inflation hedge assets, Bitcoin has a very, very different return profile, meaning that it's much more asymmetric. So right now, if you look earlier this year, right, remember the volatility works both directions. So when equities drew down 30% in March, gold was down 12 to 15%. Bitcoin drew down on one day 50%. I mean, it's just a nasty, a rip your face off, right?
Yeah, dude.
Now, when we go the other direction and asset prices increase, Bitcoin's the best performing asset. So Bitcoin's up like 45% year to date, right? Gold's up about, I think it's 15 to 20%. Right. Equities are, flat to kind of single digit positive in some of the indexes. And so what you start to realize is, if asset prices are going to go up and the Fed's going to continue to just inject trillions of dollars of liquidity and kind of all this macro stuff happens, you just want to have exposure to the most asymmetric asset, right? So I don't think Bitcoin will ever go to zero. So your downside may be, again, 20, 30, 40, 50%, whatever it is. Okay. But your upside is hundreds of percent, if not thousands of percent.
But now he starts to discuss the Bitcoin halving, and he brings up a really, really interesting point.
That brings me to, here's the most important thing you got to know about Bitcoin, the halving. So if no one's explained this yet, there's something called the Bitcoin halving, right? And I'm going to tell you why this is important. I publicly, in December of 2018, came out and I issued $1 million. My partners and I issued $1 million challenge to any manager on Wall Street. They could pick any asset, any individual stock, any asset for a decade. Bitcoin will outperform it. $1 million goes to charity. Knock yourself out. Not one person took it. Yeah. Here's why. Because the Bitcoin halving is a programmatic decrease in the incoming supply. So imagine if in 2008, when gold went down 30%, the government steps in, they printed a bunch of money, everyone ran to gold. It went up 200%, hits an all-time high in 2011. Imagine when everyone ran to gold, if 50% of the incoming supply of gold got taken out of the market. So 50% of the miners just shut down. Of course, the price would explode, right? Yeah. That's what happened with Bitcoin. So in March, liquidity crisis occurs. Government steps in, starts printing money. Everyone runs for inflation hedge assets, Bitcoin being one of a bunch. In early May, there was a drop from each day 1,800 Bitcoin being created to now each day there's only 900 being created. And that happens every 4 years. So that'll go on for 4 years, 900 a day get created, and then it'll get dropped to 450 after that 4-year period. So programmatically, what you see is you're actually making the asset more and more scarce over time. But it just so happens that this last one occurred at the exact macro environment where everyone's rushing for inflation hedge assets. And so I actually think Bitcoin's price is going to top $100,000 by the end of next year.
So if you don't know what the Bitcoin halving is, it's that every 4 years, the production of new Bitcoins that are minted or mined is cut in half. So at the beginning, 50 new Bitcoins were mined every block, and every block happened every 10 minutes. And then after 4 years, that got cut to 25. After another 4 years, that got cut to 12.5. And now recently there was another halving in May. So now every 10 minutes, only 6.25 Bitcoin are created. And this is obviously programmatically programmed into the blockchain, and it can't be changed. So this is really important because in a gold rush, if everyone's flocking to gold, if the dollar is becoming worthless and everyone wants to buy gold, well, then miners are just going to step on the mining production and produce more gold to keep up with the extra demand. The price of gold will still go up, but there will be a surplus of mining production of new gold, freshly mined gold. However, with Bitcoin, there's no such thing. And every 4 years, the supply is actually cut in half, no matter what. No matter how many new people want Bitcoin, or how many more Bitcoin you want to buy, or how much electricity you throw into the miners, you're not going to produce any more Bitcoin. You're just going to make it more difficult to mine Bitcoin.
See, I have to tell you, I'm not going to disagree with that. And the reason why I've been focused on it, and I'm glad you give me the education on it, Stan Druckenmiller is a friend of mine, and he's a great investor, though he is a Steeler fan, which then causes complications. Although I have Juju, Simon and Schuster there. I always call him Simon Schuster, like the book company. But here's the problem. He said yesterday that in 3 to 5 years, we're all going to have to pay for what the government. And my friend Joe Kernan asked me that, and I said, I have been so possessed by that because I know that we're going to get hurt. So when I go to my inflation handbook, what it says is buy gold, buy masterpieces, and buy mansions. Those are the three things that's it. In my age, okay? Those are the three things you had to do. Now, my wife's in real estate, so we've gone with the real estate as our hedge, all right? What we didn't have in that menu was crypto. And I think that you have to have, I'm going to still say gold or crypto because I have so much gold, but you have to have one or the other. And I like what you're saying about crypto. I'm not in crypto. Remember, I'm not in gold for the appreciation. I'm in gold for the alternative. But I don't know how my kids are going to pay down what happened. I think we had to do it to avoid a depression, so I'm glad we did it. But I see the dollar going down. And most importantly, I know that no one wants to raise taxes in this country. And even if we did raise taxes, we still can't afford it. We're not cutting Social Security. We're not cutting Medicare. We're on a collision course which makes me feel great about the gold I own. But I do feel that it's perfectly logical to add crypto to the menu. And now after speaking to you, I think that my kids, when they get my inheritance, won't feel comfortable with gold and will feel comfortable with crypto. And I don't want them, I try to put everything I own on one piece of paper. They won't understand the deposit box at, say, Toronto Dominion, okay? But they would understand crypto. And I have to start recognizing that maybe I am using a typewriter.
So in this clip here, we can really see that Jim Cramer really knows his shit about the macro environment and that he's extremely worried about inflation. He doesn't think the whole world's going to end due to inflation, but he knows it's going to be a serious drag, especially on people who don't have investments in assets or have all their money in cash. He understands that they're going to be really adversely affected, and he knows that any cash that he has should be invested in real estate, stocks, Bitcoin, gold.
60-40 global portfolio over the last 5 years or so, about 7.2% return, right? Annually.
Right.
If you had taken 1% of your assets and put it in Bitcoin, even with all the crazy ups and downs, everything, you would have taken that 7.2% and gone to 9.2. So it added 200 basis points of performance annually, right? If that 1% had gone to zero, you'd gone from 7.2 to 7%. So 20 basis point downside, 200 basis point upside. So it's literally 10 to 1 in terms of risk reward, right?
Right.
The key is the standard deviation of risk stays about the same, and the sharp ratio goes up over 20%.
Really?
Because it's a non-correlated asset over long periods of time.
Non-correlated asset. You're so right.
Now, all Jim Cramer has to do is to decide how much exposure to Bitcoin he wants. If it's 1%, anywhere from 1 to 5% is most likely what he'll invest, in my opinion. Pompliano called for him to invest just 1% of his net worth into Bitcoin. And Jim Cramer says, oh, yeah, no bother at all. I'll invest 1%. Sure, I have 1% in some crappy foreign index that's done really, really badly. Why not just, I don't care if it goes to zero. Why not just put that 1% into Bitcoin? I don't care if that goes to zero. But I wouldn't mind a cheeky 10x from it, you know?
I talked with my wife about this. I said, look, I got to breach this thing that I'm not comfortable with. I'm just not. And she goes, well, is that really good and prudent money management? Why don't you educate yourself? And I said, well, look, I'm going to ask this guy, Pop. I mean, I was going to go to Portnoy. I was, because I said, okay, he's in there. I got to figure this out. And then he turned on them. And and I'm thinking about 7 years, 7 years, 15 years, and 20 years. Mm-hmm. And I know that I am, if I just had that cash in there and some gold, that they may look back and say, what was my father thinking? Why didn't he know about this? He was supposed to be such a savvy guy. And I think the answer is because I'm scared.
Again, here we can see Cramer showing his humility and saying that he doesn't understand Bitcoin, or that he didn't understand Bitcoin. And he came on to the Pompliano show, or the Pom podcast, to actually learn from Anthony Pompliano. That shows a lot of humility, and definitely something to be aware of. Definitely something to take on board if you want to be a good investor yourself. To always listen to someone who's smart, or maybe not smarter than you, but knows more about something than you. Don't just brush something off because you don't understand it, and seek out learning and knowledge from anywhere you can, and learn as much as possible about everything that you can, because then you're going to see those amazing investment opportunities before it's too late. And we know it's still pretty early in the Bitcoin space.
I know it ends badly. Not the stock. I can tell you that. I'll find you the next NVIDIA, whatever. My kids can't own. They do. I mean, they later on they can do stock, but I can find the NVIDIA, but I can't find the cash. And the cash is what I'm most worried about, because I know that cash is something that will be looked at as laziness, and will be looked at as I didn't pay attention to my kids.
The best thing that you're going to see, and you've probably seen this chart before, is if you go back to 1971 and you take the U.S. stock market denominated in dollars, it's like a perfect lineup at 45-degree angle to the right? It just looks like great compounding growth. Yes. If you denominate the same exact stock market in gold, it's down. Right? So the stock market's down denominated in gold. It's just that the dollar's being devalued, which again, that is what is happening. And the bottom 50% that are uneducated about this stuff, right? They're the ones who get hurt the most because they live paycheck to paycheck. They just have cash sitting in their accounts, all this stuff. But for those that can educate themselves, you got to get into these inflation hedge assets, right? And so gold is going to be just fine. Like it's not gold's going to do bad. It's just that Bitcoin is going to be way more volatile and over very long periods of time. I think don't quote me on this, but if I remember correctly, Bitcoin's compounded annual growth rate is over 35%.
Here's another interesting statistic from Anthony Pompliano, where he says that stocks have underperformed gold. So if you denominate the stock indexes, rather than denominating the indexes in dollars, denominated in gold, the stocks have actually underperformed. So stocks, or haven't even underperformed, haven't really gone anywhere since 1971. So that's a really interesting point, that if you had invested 1 ounce of gold into the stock market, into an index in 1971, you could have sold those stocks for 1 ounce of gold today. So on an index perspective, stocks haven't really gone anywhere. Now, do I think this is a fair comparison? It's a very interesting point, but I don't think it's completely a fair comparison, because 1971 is the year that the dollar broke away from the gold standard. So once that happened, gold went into a complete hypergrowth phase. So gold did really, really well because it had been artificially kept. The prices of gold had been artificially kept low because of the dollar, being linked to the dollar and backed by the dollar. But once it broke away and they started printing loads of dollars, the price of gold skyrocketed because of that. Anthony Pompliano is suggesting that the stock market has only grown in dollars, in dollar numeration. So the amount of dollars has gone up, but on a real value perspective, it hasn't moved since 1971. I wouldn't fully agree with that point, but it's definitely enlightening to see that maybe stocks aren't as amazing as they seem because of all the printing that's been done since 1970s.
Was my daughter, my 26-year-old, saying, "Hey, Dad, how are we going to pay for $3 trillion?" But it was one of those questions. It wasn't like, "How are we going to pay for $3 trillion?" It was like, "No, Dad, how are we going to pay?" And I looked at her and I said, "Well, we're going to have to raise taxes." She goes, "But Dad, what are you going to? There's not enough money if you raise taxes. So what happens?" And I said, "Well, we don't know what happens." And she goes, "But Dad, you're the guy." And I said, I'm not the guy. I have an idea, which is not a good idea, about what will happen, which is bad. And she said, "Well, what can I do?" And that's when I said, "Listen, we're going to get you a house, get you some gold." And I did. I got it a beach house. I mean, all these are designed for what I regard. It's not going to be apocalypse. It's just going to be not good.
Yeah.
And I want to hedge against not good.
So Cramer was kind of stumped by his daughter when his daughter asked him, how are we going to pay for all the stimulus that we're doing right now in America? So obviously America has been spending trillions and trillions of dollars, giving it to the businesses, giving it to banks, and giving it to the average American people. However, sometimes you just need to be asked those extremely simple questions, like, how are we going to pay this bill? How are we going to pay for all this stimulus? Where are these trillions of dollars coming from? Because the total money supply in circulation is something like $70 trillion. So in the last few months, they've printed like 10% of the entire money supply. So what would 10% of making something 10% less scarce? So reducing the scarcity by 10% is most likely over time going to reduce the value of an individual dollar by 10%. So your dollar will buy 10% less in a few years once this inflation catches up with itself. So basically, the only way we can pay for all this stimulus is by printing ad infinitum, and they're doing this across the entire globe, particularly in the first world countries, just printing crazy amounts of money, and this is basically the best advertisement for Bitcoin possible. But it's certainly not a good thing, because it's going to anyone who's not invested in the likes of anything, so the likes of stocks, gold, Bitcoin, or real estate, anyone who's just has cash in the bank and lives paycheck to paycheck is going to be really hurt by this, and it's just going to widen the gap between the rich and the poor. So I just ask that you be on the right side of that equation and try and educate as many people as you can about this problem, so people aren't completely screwed in 5 years or living 10%. You're essentially going to be 10% poorer unless you start investing and hedging against inflation in the future. So raising taxes isn't the way out. We have to print to get our way out of this mess of paying everyone to sit at home and not work. That doesn't work. That's not how an economy runs. There's no such thing as a free lunch. There's no such thing as free money. It has to come from somewhere. And right now it's coming from our futures.
My favorite stats are for the last 6 fiscal years, the government has set a new record for federal tax income revenue, right? So we keep taking in more and more money, but the intra-year deficit gets bigger and bigger. So it's not an income problem, right? It's just, we just keep spending more and more and more and more. And people will debate, what should we spend on, what should we not? I don't care. All I know is that when you print that much money, I'll tell you where it comes from. They're going to steal the purchasing power of all the people holding cash.
Yeah, I told my daughter to read about Weimar, the Weimar Republic, read about what happened before the Third Reich, how they wiped out purchasing power, and then they wiped out savings. It was a 1-2 punch. Everyone was penniless. One of the big reasons why you had the tumultuous, and I'm not saying it's going to happen again, but you had the tumultuous things that happened in Germany had a lot to do with them printing money the way we printed. They were walking around with wheelbarrows. I hope that doesn't happen. But as a student of history, I'm ashamed that I have not acted on what is the first time that I've seen a Weimar-like situation in our country. And I believe me, in 2011, with I spoke to the Philadelphia Eagles when they had just downgraded the debt. And I said, listen, you don't have to worry. We're the strongest country in the world, blah, blah, blah. Now it doesn't have to do with whether the strongest country in the world. What it has to do with is we can't pay. We just can't. So what do? Now you can go overseas. I mean, that's not my plan.
Yep.
Or you can hedge. And a hedge I've got the hedge on one side, but I don't have appreciation of hedge. And that's why I got to make this move.
And finally, on a lighter note, Cramer compares Bitcoin to the Weimar Republic and says that, okay, maybe America won't turn to Nazism or something as extreme, but he just enlightens us to the destruction that can be caused by hyperinflation, like what happened in the Weimar Republic, which, if you don't know, is what led to the Nazis, or is one of the causes. There was hyperinflation in Germany, and then Hitler came in and got the economy back in order, and obviously everything else, the rest. But there's hyperinflation in lots of countries, and they're all in a terrible shambles. Any current countries who have hyperinflation are doing quite poorly because of it, like Venezuela and Zimbabwe in the past, etc., etc. Now, Cramer doesn't believe we're going to get to quite those levels, but with the increase in the acceleration of money printing, there's definitely going to be some repercussions. So he wants to be prepared, and maybe you should consider getting prepared yourself by hedging against inflation somehow and not keeping a large amount of money in cash. So if you enjoyed this video, I'd hugely appreciate if you could smash the thumbs up button. Remember to enter the competition if you want one of these epic books. Get that learning into you and be a nerd like me. Subscribe if you haven't already. Hit the post notification, because I'm a small channel. It won't appear in your recommended feed, most likely, unless you've hit the notification bell. So I really appreciate if you could do that for me. And really hope you enjoyed the video. Links for the podcast and for Pompliano's podcast obviously be in the description. I really hope you enjoyed this video, and I cannot wait to see you in the next one. Thank you so much for watching. Cheers.